The Federal Reserve. When they speak, markets listen.
The committee decided today to keep the target range for the federal funds rate.
The committee judged it prudent to maintain the current policy stance.
The FOMC raised its policy interest rate by 1/4 percentage point.
The nation's central bank is tasked with steering economic policy with a mind on two mandates: maximum employment and stable prices. To get a pulse on all corners of the country, the Fed has 12 outposts from coast to coast. Each so-called Reserve Bank district is responsible for bringing its regional reports back to the policymaking table in DC to decide on what monetary policies will best benefit the nation at large. In Yahoo Finance's Meet the Fed series, we visit one of these regional reserve banks to talk about their local economies, what makes them unique, and how the Fed engages with the people, businesses, and banks that play an integral role in those districts. Today, we're introducing you to the 9th District, the Federal Reserve Bank of Minneapolis. Not only home to cheese curds and Juicy Lucy's, it's also a very important geographic district that covers a lot of the American North. At the corner of North First Street and North First Avenue, the Minneapolis Fed is a fixture not only to the city, but to a regional economy covering over 400,000 square miles from the western border of Montana all the way to the eastern edge of northern Michigan. Although the 9th District has the smallest population compared to any of the other 11 districts, the geographical diversity makes for a resource-rich economy. About a third of the nation's wheat is produced here, and the upper Great Lakes also produce about 90% of the nation's iron ore. Neel Kashkari became president of the Federal Reserve Bank of Minneapolis in 2016. A former aerospace engineer and Goldman Sachs banker, Kashkari also oversaw the Troubled Asset Relief Program used to stabilize the financial system in 2008. The district, he says, is an archetype for America at large.
It's a huge geography. It's very diverse in terms, there's ethnic diversity, but there's sectoral diversity. And if you think about the ag sector in western Montana looks totally different than the ag sector in Minnesota. And so in many ways, the 9th District looks like the U.S. All major sectors of the U.S. economy are represented here in scale. We have energy in huge scale in North Dakota. We have manufacturing, we have services, we've got healthcare, technology, various ag sectors. So what's exciting and what's interesting about it is when I travel around the district, I'm actually getting a pretty good glimpse into what's happening in America, around the whole country.
Yeah.
And so it's a challenge for us to make sure we know what's happening across all of these regions, but it serves me very well because when I go to Washington for FOMC meetings, we have to make recommendations about what to do for the U.S. economy as a whole, not simply for the 9th District. And so this is a really rich region to help me do my job.
At the same time, are there other characteristics that make the 9th District specifically unique compared to other maybe ag exposed that could be actually exemplary of the whole country at large, other districts as well? I think of St. Louis, perhaps. I think of Kansas City. What makes Minneapolis, Minneapolis?
Well, I'll tell you, a few things. One is you think about climate change. This is a big topic. I absolutely believe in science, and I believe in the science of climate change. How climate change and global warming is going to affect the country. It's going to affect different regions differently. So today we're in Minnesota and it's 0 degrees outside. If you did some analysis, you could say if the country got a little bit warmer, Minnesota may benefit from that when many other parts of the country they're going to be big costs to global warming. And so that's just one example. Another thing that's especially relevant here is obviously news in the last couple of years has been racial disparities in Minnesota. George Floyd being murdered not far from where we are sitting right now. These are front and center of issues that we work on every day with our colleagues at the Minneapolis Fed and with many other leaders around the region because too many people in Minnesota are being left behind by an economy that's not inclusive. I live here, the 1,100 employees of the Minneapolis Fed live here, so we are members of our community. So we care because it's our community and it's our community members that are being affected by this. But there are things we can do. There's an economy that is systematically leaving out lots of its citizens. That's not a fully functioning economy. That's not an economy running at full potential. So we're always looking for what are policy ideas. We launched in 2017 the Opportunity and Inclusive Growth Institute. The purpose of this is to harness the Federal Reserve's research capability to shine a light on these disparities, to understand them, and understand what are policy solutions that could make the economy work for everyone. And even if we don't have the tools to implement them at the Fed, if we can share that analysis with other leaders, then maybe a state legislature or the federal government could take it up.
Something the Federal Reserve can control is interest rates. When the central bank levers borrowing costs, it bleeds through to the economy in the form of changes to the rates paid on auto loans, credit cards, mortgages. But the mechanisms for doing this are sometimes tough for Fed officials to explain to everyday people, making communication key when interacting with people in the district.
What I say to them, I simply say, we always talk about our dual mandate, maximum employment, as many people working as possible, and stable prices. Think of an economy that's not overheating, but not also limping along. And those two things are like a seesaw. If the economy gets really hot, the unemployment rate will drop, but then you might see wage gains go up. So in that environment, we would tend to raise interest rates to make it a little bit more expensive for you to get a car loan, or for you to get a mortgage, or for the business to get a business loan, which will tap the brakes in the economy and bring these two things back into balance, just to steady things out. And if we're getting into a downturn, we will try to cut interest rates to make it cheaper for you to buy a house or cheaper for you to buy a car, which then makes it more likely you're going to buy a car. That provides some stimulus to the economy, and that provides some boost. So when I explain things that way, most people say, oh, I get that. I understand now how interest rates affect me.
So at the same time, it's interesting because a lot of people are maybe interpreting what the Fed has been doing over the last, let's say, decade or so as money printing and expanding the money supply and what have you. But at the same time, I guess that's been good because that's increased the eyeballs on the Fed. My Uber driver yesterday said, oh, you're going over to the Minneapolis Fed. That's the 9th district, isn't it? So people are aware of what's going on and what the Minneapolis Fed is and what's going on. But do you feel that that's been kind of good for the Fed to actually have more people caring about what monetary policymakers are doing? Or do you think that also comes with a little bit of a PR challenge as well?
I think it's net positive. I think there's been an active strategy. I think Ben Bernanke, when he was chair, started it. Janet Yellen continued it. Jay Powell has added. And all of my colleagues, we want to be as open and transparent as possible to explain, even these are very complicated topics, explain to the public what we're doing and why. We need to earn the public's trust and maintain the public's trust so that when things happen, and we may have to do something that is not good in the short term for people's pocketbooks, that they say, hey, we trust those folks. We know that they're working in our long-term best interest. And that's why establishing that trust and maintaining that trust is so important. And the best way we can do that is by being transparent with people about what we're doing and why.
How do you balance what might be different lived economies in your district? Because the person that you're reaching out to from the Helena branch might have different experiences on inflation or unemployment than someone here in downtown Minneapolis, but you're looking at aggregate figures sometimes. So how do you kind of combine those two observations?
That's a key challenge. I mean, it is, if we just look at the medians or just look at the averages, we lose insight into all of the top and the bottom. And so taking a much more broad examination of just say the labor market. Okay, businesses kept saying to me in 2016 and 2017, worker shortage, we can't find workers. But I would go into low-income communities and they would say, we can't find jobs, or we're stuck in a part-time job. Completely different.
Yeah.
That made me realize, hey, these businesses probably are not giving me the full picture. So, at the Minneapolis Fed, we've changed our beige book, which is every 6 weeks, all the 12 districts put out a beige book. Mm-hmm. We've changed ours to specifically include what workers are saying, to specifically include what small and women-owned businesses are, what they're experiencing now, to make sure that structurally we don't fall into the trap of just listening to one set of voices. We need to make sure we're listening to all the voices in our region.
There are other critical functions that the Fed Reserve Bank serve as well. Like other reserve banks, the Minneapolis Fed is in charge of distributing cash to the many banks in the district.
All the Federal Reserve banks are the repositories of cash, essentially, for their region. And we have Brinks trucks coming to and from our bank all day.
You have a lot of security gates here.
We have a lot of security here for good reason. So if you go to your ATM and you take out $100, that money will have started out in a Federal Reserve Bank somewhere. And so we provide cash to the banks. Now, I'll tell you why that's so important. Usually it's not a big deal. Usually nobody thinks about it. But in March of 2020, when the COVID shock hit and everybody was terrified, it was remarkable. People were shunning not just stocks, people were shunning corporate bonds, people were shunning treasury bonds, and saying, we just need cash. So the cash operations at the Minneapolis Fed and all of our colleagues around the system worked overtime, worked night and day to make sure that they could get cash out to the banks to meet their customers' needs. Because if you ever went to your bank and they said, we don't have cash to give you, that could trigger a crisis of confidence, a true panic. We needed to make sure that that didn't happen.
Safety and soundness.
Absolutely, just confidence in the financial system. That's fundamentally why the Federal Reserve was created, to be that lender of last resort. And our cash operations is a key piece of that.
How about supervision and regulation?
Really
There's some big
important.
banks in the district.
There are big banks in the district, but we also have lots of community banks. And so making sure that the banks that people are using, making sure that they're safe and sound is really important for the local economy, and it's really important in terms of financial stability as a whole. You know, again, go back to the COVID shock. When the PPP program was set up, there was no way to get these hundreds of billions of dollars out to small businesses directly from the government. There's just no way you could do that in the middle of a crisis. So the Small Business Administration and the Treasury and the Fed worked together to say, let's get that out through the banking sector. And we at the Minneapolis Fed had a liquidity facility that we coordinated for the Federal Reserve System to get cash out to the banks so that they could make those PPP loans to small businesses. We saw in that 2020 timeframe how community banks stepped up very aggressively to meet the needs of their small businesses. And they were in the best position to do that. The big banks could not react as nimbly as the community banks did. And so that's why making sure that these community banks are safe and sound is really important.
What does the community bank network look like here in Minneapolis? Because even though there are some big banks, there's actually a lot of in the Dakotas, for example, it's almost entirely all community banks.
That's right. It's a very rich network of community banks. There continues to be consolidation among community banks. It's been a trend for a long time, unlikely to stop. But there are a few big banks, but there's still a very rich community banking network, and making sure that the big banks and the small banks are safe and sound. That's a key part of the mission of our colleagues in supervision and regulation.
Last question, if you could describe the 9th District in one word, what would it be?
Welcoming. I mean, for me, the experience that I've had, I've been here now 6 years, and it's been a very welcoming district. People across the district, when I go and travel, they want to hear about the Fed, they want to learn more, they want to share their insights and their ideas. You know, it's not a perfect district, as we just talked about a few minutes ago. There are some real challenges here, but overall, I found the people here to be very welcoming.
We'll catch you in another corner of the country on the next episode of Meet the Fed. For Yahoo Finance, I'm Brian Cheung.